Marcus Garrett here. I'm the author of Debt Free or Die Trying, How I Buried Myself $30,000 in Debt and Dug My Way Out. I've been an auditor, author, data and financial analyst for the last 15 years. And today I want to talk about how much home you can afford on a $30,000, $50,000, or $100,000 salary. So the problem set is trying to solve for how much home can I afford. One resource that I went to is the Consumer Financial Protection Bureau. The CFPB, Consumer Financial Protection Bureau, is a government agency, US-based government agency that makes sure banks, lenders, and financial companies treat you fairly. So what they found is that studies of mortgage loans suggest that borrowers with a higher debt to income ratio, which we're talking about today, are more likely to run into trouble making payments. Therefore, they recommend that debt to income not exceed 43%. In most cases, that is the highest ratio a borrower can have and still get a qualified mortgage, according to the CFPB. Today, I'm going to assume that you have other debt, so I'm going to focus on the home, and we're going to use a range of 30%. As I just talked about with the CFPB, that can go all the way up to 43%, but I'm not going to sit here and make the recommendation that you max out your debt qualification. And again, all of this information will be in your video description. Well, what is a debt to income ratio and why is that 43% important? This is right from the website. That's a monthly number that helps you determine how much debt you have divided by your gross monthly income. So to come up with that ratio, they recommend that your total debt not exceed 43%. So I'm going to bring that down a little bit, assuming that you may have other debt, student loans, credit cards, car, etc. And we're going to use 30%. So we've got it right here from the CFPB that total debt should not exceed 43% of gross income. So on a $30,000, $50,000, or $100,000 salary, again, I'm assuming and using a ratio of 30% here because I'm assuming you have other debt. That gives us a mortgage rate should not exceed $750, $1,250 at $50,000, or a mortgage rate of $2,500 at $100,000. So now we know how much our mortgage should not exceed based on our salary, but then what does that mean for our total mortgage? So I've got a few other resources that I want to recommend to help you with that part of the decision making. This is just another way of looking at it. I mapped it here. How much home can you afford? On a $100,000 salary, you want to stay below $2,500. $50,000 salary, from left to right, you can see there. And then it's also in this picture format here because I know some of y'all are graphically inclined. Based on this quick visual and the recommendations from the CFPB, we now know how much mortgage we can afford based on our salary. What do we do with this information? There are a few tools that I like when it comes to mortgage calculation. I'm going to walk through those right now. Once again, if you watch my car loan video, you know that Google has some calculators built right into the platform. If you want to get to their mortgage calculator, you can type in mortgage calculator. It'll be the first or second result that comes up on some of your screens. You'll actually see an ad here, but you'll quickly see mortgage calculator for Google. The average home loan is about $280,000. I'm going to use a 30-year fixed loan at 3%, and you can play with these numbers. If you know, if you've already got a loan offer from a bank or credit union, you can actually enter your exact results. But it's pretty straightforward. If your loan is $280,000, 30-year fixed, 3% interest rate, you're looking at a monthly payment of $1,180. Another way to look at this is to go over to the purchase budget, as we just talked about there, and you can start to play around with the numbers for how much home do you want to buy, and then look at how that'll start to affect your budget, your credit score. It's already using the state of Texas for me. Again, great tool. It's Google. We know it's reliable. So what do we do with that information? Let's say you have a $50,000 salary, as we talked about. If we want to keep that under 30% of our gross, that's less than $1,250. So we want a mortgage of $1,250 or less if we have a salary of $50,000. You can go over to Google's mortgage calculator and start to see how much home you can afford, and you want to keep this number under $1,250. So 285 gets us about there. So in that scenario, you're looking at a loan, a home mortgage loan of about under $300,000. So that's $1,265. That gets us pretty close. Again, going back to how much home you could afford on a $50,000 salary, they recommend staying under $1,250. And you're a little bit over here, so you probably want to get it down if you want to be exact. And if you want to be exact, it's actually closer to about $297,000, $1,250 monthly payment, and you stuck to your budget recommendation. And you're sticking to that recommendation of keeping it under 30% of your salary if you're making a $50,000 salary. So you can start to see how these tools work together to see how much home you can afford. I do want to highlight another tool that's a little bit more robust than the mortgage calculator that Google provides. You'll see here that you can start to include taxes and fees if you want to look at that information. However, I recommend going over to bankrate.com/calculators. Their first calculator that will come up is actually a mortgage payment calculator, and I've plugged in some of these numbers already. And the average home loan, or average U.S. home, I should say, is $280,000, and that gives you a mortgage rate of $1,540. And the reason I like this tool from Bankrate is it actually already breaks down the principal and interest, insurance, property tax, and homeowners fees if you want to add that in if you're in the HOA area. This also has a quick methodology for if you want to put a 20% down payment, and you can change that number if you can afford 10 or 0. It'll automatically run those calculations for you. Or you can type in the exact amount of home that you want to buy or if you're considering, and it'll break all this information down for you. Great tool and resource. And again, you can find that at bankrate.com/calculators. And they have a few tools that you can use under mortgage calculators. This mortgage calculator is the one that we just walked through. They also have an amortization schedule if you want to see the breakdown over the 30-year mortgage or a 15-year mortgage if you're using a 15-year. They also have a how much house you can afford calculator. It's a little bit more detailed, so I'm not going to go into that today, but you can play around with that tool. All of these are great tools. And of course, the debt to income ratio calculator that we talked about today, the CFPB, recommends keeping that under 43% of total debt. This time around, if I had to choose between Google's mortgage calculator or Bankrate, I'm going to go with Bankrate. I think their tool's a bit more robust and easier to use, and you can find that at bankrate.com/calculators. Lastly, I know some of you haven't even made the decision about whether you want to continue to rent or buy. So I wanted to give you 2 more resources for my favorite, is it better to rent or buy calculators. The first is from The Upshot, which is an offshoot of the New York Times. I'll get this link in your video description and your resource guide, and you can. So what I like about this tool is it takes into account home prices in your area and how long you plan to stay there, and several other factors that don't always come up in these discussions about rent versus buy. So great tool, completely free. I'll get that link in your video description as well as your resource guide. Another tool I like is from Smart Asset. They have a rent versus buy calculator as well. And you can actually type in your exact city. You can look at your monthly rent, target home price, and they'll tell you the result of in your specific area or region, is it better to rent versus buy? Another 2 great tools if you're still in the rent versus buy discussion, or you haven't moved over to the mortgage discussion or home buying, or you're just not sure is it better to rent or buy. 2 great tools from the New York Times and Smart Asset. I've also given you the exact resources that you can use to analyze this information. That includes the Consumer Financial Protection Bureau, or CFPB, a US-based agency. Remember that Google has their own mortgage calculator. Just go right there to Google and type in mortgage calculator. But my recommendation is bankrate.com/calculators. Here's the direct link to both of those. And then if you're still on the fence about rent versus buy, 2 great resources, absolutely free, from the New York Times and Smart Asset. If you want to look at regional, I recommend Smart Asset. And if you just want to have a general understanding of rent versus buy, I would recommend the Upshot's New York Times rent versus buy calculator.